One of the big questions out there right now is which way the U.S. equity market is going to go from here, now that we've seen what would be a normal bounce after a big drop like the one that we saw a few weeks back. Will the market do what it's done for a decade and push from here to another record high, or will it start to do something else, which would be stalling out into rallies for fresh weakness? Technically speaking, this question is about the same old higher highs and higher lows, or start to lower tops and lower lows. What happens here is important because it impacts the entire global economy. If U.S. equities are up, sentiment is running high, and conversely, if they're down, investors aren't feeling all that great. We continue to argue for the need for a much bigger pullback, but we aren't doing so because of all doom and gloom outlooks. We're doing so because of the opposite. Policy normalization means the economy is in a better position. The trouble is that it's been this excessive policy accommodation that has fueled a move that has run too far and too fast. Of course, there are many who would debate this point, but that isn't what this update is about. The key takeaway really is just about needing to keep an eye on stocks where we could see some big moves ahead. On the FX side, there has been some dollar selling that has worked back in after the dollar run on Monday that had led to the euro dropping to fresh 2018 lows. There is a view that with the Dems gaining more power after the midterms, this will be something that handcuffs the U.S. administration's soft dollar policy, but we aren't as convinced of this and are also mindful of the damage a stronger dollar could do to emerging market economies already struggling to manage existing U.S. dollar-denominated debt exposure. The pound is chopping around with all of the Brexit headlines and will be digesting what comes of these most recent meets between Theresa May and her cabinet about moving forward with a deal. It's all still quite fragile, but news of an official presser and deal would do a good job opening a nice adjustment higher in the UK currency. Looking at today's data, UK CPI was a little softer, though it held steady and was somewhat offset by hotter UK producer prices. Eurozone data was mixed and not too far away from expectation, where it did let down, while on the US side, CPI came in softer than forecast. Looking ahead, key standouts on Thursday's calendar include an early speech from Fed Powell, Aussie employment, Aussie consumer inflation expectations, UK retail sales, Eurozone trade, and US readings that feature Empire Manufacturing initial jobless claims, the Philly Fed, business inventories, and retail sales. That's all for now.